There's a specific kind of panic that hits every new business owner right around January. You're staring at a pile of mixed out receipts and realizing you have absolutely no idea what you actually owe the government. If that's you, stop. You do not need to memorize the entire IRS code to get this right. If you're a beginner, you just need to understand business taxes in a simple way. When you have a job, your boss handled this for you. But now that you are the boss, you just need a system to replace them. And that is exactly what I'm going to show you. Principle 1. The golden rule of separation. Let's start with a mistake that causes 90% of your stress. It is called commingling. New business owners often treat their bank accounts like a blender, mixing personal grocery runs with business software subscriptions in the exact same place. Now, the golden rule of business taxes is simple. I recommend opening a dedicated business bank account. It does not matter if you're a freelancer making $500 or a startup making $500,000. Why? Well, because the IRS requires you to prove that every deduction is ordinary and necessary for your business. If you buy a coffee on a mixed-use card, you have to manually justify if it was a client meeting or just your morning fuel. But when you separate your money, the audit happens automatically. You don't have to guess. If it is in the business account, it is a business expense. If it is not, then it is not. This single step protects you from red flags and keeps your bookkeeping clean from day one. Principle 2. The structure blueprints. Now, before we talk about what to pay, we have to talk about who you are. A lot of beginners panic and ask, do I need an LLC to file taxes? Here's the thing. For tax purposes, the IRS often treats a standard LLC and a sole proprietorship exactly the same. They call them pass-through entities. This means the business itself does not pay an income tax bill. The money passes through the business, lands in your personal bank account, and you pay the tax on your personal return. So, do not get hung up on the fancy titles. Whether you're just you or you LLC, the tax buckets we're about to cover apply to you. Principle 3. The Big Four taxes. Most people think business tax is just one big check. It is actually 4 different buckets. Bucket 1 is income tax. This is the tax on your profit. Revenue minus expenses equals profit, and you pay tax on that number. Simple. Bucket 2 is the one that surprises everyone, self-employment tax. When you were an employee, your boss paid half of your Social Security and Medicare taxes for you. Now that you are the boss, you have to pay both halves. That is roughly 15.3% of your profit right off the top. Bucket 3 is sales tax. If you sell goods or certain services, you collect this from customers. Now, crucial warning, this money was never yours. You are just holding it for the state, so do not spend it. Bucket 4 is payroll tax. This only applies if you hire employees. And be very careful here. Classifying an employee as a contractor just to save money is a major red flag that leads to massive fines. Now, knowing these tax buckets is great, but it is useless if your data is a mess. You cannot file what you have not tracked. If you're waiting until tax season to finally look at your bank statements, you have already lost. You need a central system for your money. This is why I partnered with Xero. Xero is an all-in-one cloud accounting platform that keeps your books clean year-round, not just at tax time. Instead of manual data entry, Xero connects directly to your business bank account. It pulls in your transactions automatically, so all you have to do is click OK to reconcile them. Think of Xero as your foundational tax prep software for small business. It tracks your income and expenses in real time. So when tax season hits, you are not digging for lost receipts. You're just generating a report to send to your accountants. It simplifies compliance, helps you stay on top of cash flow, and honestly, just helps you sleep better knowing your numbers are accurate. If you want to stop the guessing game, Xero has a massive offer for you guys. As of the time of making this video, you can get 90% off for 6 months by using the link in the description below. It is the best way to start that golden rule of separation we talked about. Check that link, grab the offer, and let's get back to those deductions. Principle 4, the art of the write-off. Alright, so we have to talk about write-offs because the internet has lied to you. A tax deduction does not mean the item is free. It means it lowers your taxable income. If you buy a $1,000 laptop and your tax rate is 20%, you save $200 in taxes. You still spend $800. So it rarely makes sense to spend money just to get a tax deduction. That is bad math. However, you should claim every legitimate deduction you have. The IRS has a simple phrase for this: ordinary and necessary. If an expense is common for your industry and helpful for your business, track it. Common examples include your home office, if you have a dedicated space, startup costs up to $5,000 in your first year, and software, including that Xero subscription I just mentioned, which is 100% tax deductible. Principle 5, the calendar trap. The final trap beginners fall into is the April surprise. The US tax system is designed as pay-as-you-go. Generally, you are not supposed to wait until the end of the year to pay your taxes. If you expect to owe more than $1,000 in taxes for the year, you are generally required to pay quarterly estimated taxes. Most people miss this because they're used to filing once a year. But as a business owner, you need to mark 4 dates in your calendar right now: April 15th, June 15th, September 15th, and January 15th. Set these alerts on your phone. If you skip these payments, you do not just owe the tax later. You often owe penalties and interest on top of it. So, how do you actually pay this without going broke? Well, my personal rule is simple. Every single time I get paid, I immediately move 25 to 30% of that money into a separate savings account. Do not look at it, do not touch it. Pretend that money does not even exist. That money belongs to the IRS. If you do this consistently, tax season isn't a panic attack. It is just a money transfer. Business taxes can feel heavy, but they're really just an organization problem. If you separate your accounts, track your big 4 tax buckets, and use a tool like Xero to keep your records clean, you're already ahead of 90% of business owners. You don't need to be a CPA to get this right. You just need a system. Special Xero offer. Get 90% off for 6 months using this link. Terms and conditions apply. Thank you so much for watching, and I'll see you in the next one.